Welcome to our channel, where we talk about the most recent developments and trends in the financial and investment industries. We'll be discussing Tesla's possible stock buyback program in today's video. Investors and experts have been debating this subject a lot lately. Could Tesla's decision impact the course of the company's finances and performance going forward? Stay put to discover out. A lot of experts and investors are eager to see if the business will implement this plan. Don't forget to hit the like button and subscribe to our channel before we go any further. Even though the company recently released what many view as subpar Q4 data, the primary EV stock has been moving dramatically for some time, so repurchasing shares now could prove to be quite beneficial for the company. Investor discussion about Tesla's potential stock buyback program has increased, particularly since Musk hinted at it during the company's third-quarter earnings call. Elon Musk, the CEO of Tesla, and other business representatives faced tremendous pressure from analysts and investors on that earnings call to address the firm's price swings. Musk stated that Tesla may still do a $10 billion repurchase even if 2023 proves to be a difficult year for the firm. We've debated the buyback idea extensively at the board level, and the board generally agrees that it makes sense to do a buyback, but we want to work through the right process to do the buyback right, Musk stated. The CEO of Tesla, Elon Musk, also hinted that a significant buyback is probably in the works, but keep in mind that board permission and review are still required. Over the past few months, a lot of analysts have discussed the potential advantages of a stock buyback for the company. Musk said that while market teams prioritize the near term, it's critical to prioritize the long term. Envision a lively marketplace brimming with vendors and purchasers. In this marketplace, a corporation is similar to a vendor selling its shares, but occasionally the business might choose to repurchase a portion of its stock, thus acting as a buyer in the market. There may be several advantages to this. Support for the stock price, for instance. A buyback can raise earnings per share and boost the value of the remaining shares by lowering the number of outstanding shares. This can uplift the confidence of shareholders and increase the stock price. Plus, there's more control. Repurchasing shares essentially results in a decrease in the number of shareholders and a consolidation of ownership. As a result, the corporation may have more influence over its future because fewer opinions will be taken into account when formulating strategic plans. The advantages of a buyback are comparable to those of being a shrewd consumer in a crowded market. In addition to optimizing your spending, combining your ownership, maximizing the value of what you're doing, and even lowering your tax burden, it makes sense that so many businesses decide to repurchase their stock. How, therefore, can we maximize a buyback? There are various reasons why it can be beneficial to understand the specifics of a stock repurchase. The first reason that matters to us investors is that you can time the market. Repurchases may be a sign of a company's perception of the state of the market. A corporation may indicate that it believes its stock is cheap and is optimistic in its future prospects by announcing a repurchase. On the other hand, a firm may be signaling that it thinks the stock is overpriced and that the market is perhaps in a bubble if it stops or scales back buybacks. When Elon began selling his personal Tesla shares in the middle of 2022, the stock of the company plummeted for just this reason. The effect it has on the stock price is the second reason. Repurchases may have a favorable or negative effect on the stock price of the company. A company's stock price may rise if it buys back a sizable portion of its shares, which may lower the number of shares on the market and raise earnings per share. This is fantastic news because Tesla reported profits after the market closed in Q4, and the company's earnings per share showed strong performance. The maker of electric vehicles outperformed forecasts in terms of revenue and earnings. Shares of Tesla increased by 5% following the company's recent declaration that it might make 2 million cars this year. Adjusted earnings for the day after the announcement were $1.19 per share, above Refinitive's estimate of $1.13 per share. Furthermore, revenue for the quarter came in at $24.32 billion, as opposed to Refinitive's projected $24.16 billion. Tesla's revenue was $17.72 billion, up from $1 billion in the same quarter last year. Adjusted earnings per share were $2.52, or $0.85, when the August 2022 stock split was taken into account. With $467 million in regulatory credits, the company's Q4 automotive revenue of $21.3 billion represented a 33% year-over-year gain. Following the announcement of the quarterly delivery report on Monday, the company's shares finished 6% lower in just the first week of April 2023. A concern among many investors is that further price reductions may be required to boost sales, thus reducing profit margins. Over the weekend, Tesla revealed that out of 440,808 vehicles produced in the first quarter of this year, it delivered a record-breaking 422,875 electric vehicles. Even if deliveries have increased by 4% from the previous quarter, some investors remain uneasy about Tesla's ongoing price reductions in the US, China, and Europe. To put it another way, a portion of the US reductions were implemented so that Tesla and its clients may benefit from tax credits made available under the Inflation Reduction Act. There is, however, a persistent worry that Tesla will have to keep cutting prices if it hopes to draw in customers as more rivals enter the market. Some investors have demanded that Tesla announce a $15 billion stock buyback as a result of their worries. As previously mentioned, billionaire Leo Kogan, who asserts to be Tesla's third-largest individual shareholder, tweeted Martin Vicha, Senior Director of Investor Relations, suggesting that the company should finance the buyback with free cash flow rather than depleting its $18 billion in cash reserves. Additionally, Kogan said that when capital expenditures are taken into account, Tesla's free cash flow, which was $2.2 billion in the first quarter of this year, should increase to $8 billion this year and $17 billion the next year. He thinks Tesla can repurchase its cheap stock in addition to investing in additional factories, its Optimus bot, and fully autonomous driving. Investors believe that now is the ideal moment for Tesla to undertake a repurchase due to the company's recent price changes. It is important to comprehend the timing and effects of a stock buyback on Tesla stock, since it can help investors make decisions about investments and offer insights into the company's financial situation and future performance. According to YouTuber Dave Lee, a buyback of Tesla shares is possible because the company could produce 10 million cars a year at an operating profit of $15,000. There's reason to believe that Tesla is now ready to give traditional manufacturers a serious run for their money, as Lee stated in regards to the company's ability to compete with them. Unlike conventional automakers like General Motors and Ford Motors, which were forced to close multiple factories as a result of the worldwide chip shortage, Tesla maintained quarterly sales records and sold almost twice as many cars as the previous year without experiencing any negative effects from the industry-wide crisis. Beyond its yearly auto sales figures, Tesla's capacity to obtain essential parts may have greater ramifications, indicating that the company, along with other up-and-coming electric vehicle companies, may represent a more direct and formidable challenge to the hegemony of industry titans like Volkswagen and General Motors. The overall worth of Tesla will be $5.4 trillion if the company generates an operational profit of $150 billion annually and receives a 30x multiple from investors. This is in line with the predictions of the majority of business executives and lawmakers. For most investors, Dave Lee says buying Tesla shares would be a smart move. The third largest shareholder in the business, Leo Kogan, has been pushing for a share buyback for a number of months, and a petition has been launched asking Tesla to return a portion of its shares. The petition has been going strong. As of late November, it had gathered about 5,300 signatures. It called for a buyback of Tesla by the end of 2022, following the EV company's challenging year brought on by Elon Musk's acquisition of Twitter. One petitioner out of the 5,000 claimed that he was compelled to switch to shorting Tesla stock in order to keep his capital. Before he goes long again, he feels that the board should take some action, such as a buyback. According to Wedbush analyst Dave Ives, activist investors may put more pressure on Tesla and Elon Musk in 2023. Tesla's stock price fell by 50% in 2022, despite the company seeing significant growth, which made it a target for activists. For supporters of Tesla, who are optimistic about the long-term prospects of this incredible firm, this news is significant. Please remember to subscribe, use the like button, and keep viewing our other videos if you liked this one.